Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So it was a really interesting week in performance of the market and on the information background that we've got. So, and I don't know whether you have seen it or not, but the gold market shows a bit different price performance compared to the other markets. So as we said yesterday in our weekly report on the Forex market, it was seemed that indeed market has shown a bit overreaction on what central bank have told in their statements, especially in the European Central Bank. Mostly it has happened just because of the very long-term expectation of some changes from the central bank, especially in Europe. So investors were so longly waiting when the central bank will change something and will announce some more hawkish steps, that once that has happened, it was led to some optimism and some overreaction on this statement. But in reality, the overall background and the balance between the United States dollar and the euro currency hasn't changed. But on the gold, we do not see this back action compared to what we have on the currencies. If currencies have dropped significantly, gold is not, and it stands in the high levels after the upward action. Yes, as on Friday was some pullback, but it is suggested by our analysis. We discussed this on Friday, and mostly by the new wave of the fears around the Omicron. So this weekend we have taken a look in the long-term view on the gold market in our report as usual. So lots of subjects to discuss in there. So why in particular gold market shows a bit different performance, and what we could count on, what we need to take a look at in the longer term to understand whether gold will keep going higher or it will be very short term. While the short term perspective we discussed right now in the video. So first of all, I would like to warn you that you should not be deceived by the charts of the retail brokers that you have. So if you do not consider Chicago Mercantile Exchange futures chart on your retail broker chart, you could get wrong information on the weekly chart. So for example, if you will take a look at I have the FX choice, you could see nothing here. But if you take a look at Chicago Mercantile Exchange futures, you will see that we have side by side two bullish grabbers. Both grabbers suggest action above the 1880. Here on spot market, it's a bit different level, slightly lower, just because the futures price have a bit different absolute level, while the swings are the same value. So it means that based on the weekly chart, we have the bullish context, trend stands bullish, and markets dispatches suggest upward action above this area. Potentially, it might be completion of this flat ABCD pattern around major 618 level. So here is 1930. On the spot market, it will be around 1922, 1920 area. So that's the medium-term expectations that we could follow. Second important moment that we've got from the weekly chart is the invalidation point. Since we're based our approach and our scenario on these patterns also have been formed at the major support. So you can see actually that is what we were waiting for a long time. It's around 1758. We said until market will not complete intraday targets and hit important level, we're not considering taking the long position. So now that has happened, we have the first bounce up, it's rather fast. Now we have the first retracement, and our suggestion is that we intend to consider possible taking the long position with against these lows. So that's the idea on the daily chart. Here we are watching for two moments. First of all, take a look at our prediction on Friday has stopped approximately in an area that we have specified. If you remember, this was extension on the intraday charts. This is also resistance here, previous top, and daily lever bottom, near the daily lever bottom, shows the pullback. On the 4-hour time frame chart, we're considering a bread butter trade that we initially discussed. If you remember, for us stands good. We said if market will show the pullback, we could consider some short Napoli pattern, and one of them is bread butter that might be formed in the next week. Here you also could see this is natural support stance. Previously it was resistance. A few times market has tested it. Now it's broken up. Now it will be the support. And finally, on the 4-hour time frame chart, if you remember, we also discussed the possible shape, kind of the hand and shoulders pattern. So the bottom of the shoulder also stands somewhere around this area, maybe slightly lower. But anyway, that's an area of the 1780, 1790. So if you're trading on a daily chart, that's an area to consider possibly taking the long position. So it's approximately the trading plan that we have. On the hourly chart, you could see that right around the 1790, we also have a kind of the confidence. So whatever your reaction point you will take, either this one or that one, you will get approximately the same area. So 1790, 1794 is an area that we're watching for, where potentially the bread and butter could start to work. And speaking with this bread and butter, we are not considering just the pullback to the 618 level, just the minimum target of the bread and butter. We suggest that this pattern should become the starting point of the upward direction with the weekly grabbers that could let us to reach previous top that we have and potentially move to the major resistance that we have on the daily chart. On the daily chart we do not see it. On the weekly chart, and this one, 1922 approximately. Here's the OP that you've just shown you on the futures chart. So this is our scenario for a few weeks probably, but it's based on these lows. So if market somehow will break it down, start dropping, this scenario of course will be cancelled and we will have to watch for something else.